Record. Right, welcome everybody. Friday, Thursday. It's Thursday. Right. Sorry, I've been up really early. So yeah, we've it's been an early start. Right. Well, one thing that I wanted to go over before we even start everything is, stick to a plan, all right? Your whole time, you're going to be tempted with, lots of things like, for example, you're going to be tempted, to trade, say, yen at a certain time, or you're gonna be tempted like right now, everyone's, silver seems to be trending. But if you got a plan, you got your routine, you got your pairs, you got your times, stick to it because there is no there's no point in deviating. There is always a pair, you're going to have US 30, everyone's going to say, "Oh yeah, start trading it SPX 500." Bitcoin, like I'd said, right now, silver seems to be the trending one. But if I don't know if you guys have, noticed, but I tend to, stick to the pairs which I want. And then yeah, that's obviously what I like to, do. So, just make sure that you're, sticking to your routine, don't change it, and yeah, you'll be pretty happy. So right, let me just get everything going here. Um, just before I start, I just want to make 100% sure. Can everyone hear me okay? Yeah. Just put yes in the chat if you can hear me okay. Yeah, yeah, perfect. I just wanted to make sure it wasn't like a silent show. Right. So before we get on to everything, let's go into our routine. All right. What happened yesterday? We had the FOMC press conference. The Fed did not increase interest rates. They kept them same, and they said that it's all data dependent. So you know, yeah, I mean, I've gone through the, minutes, and yeah, it's kind of how Jerome Powell speaks. He's very much, oh, we need to wait for data. We've got inflation under control, but the jobs market is under threat, and tariffs have done this. So he didn't yesterday. The reason everything's pumped, he didn't answer any questions. So this is what I always say about speeches, and it's worth obviously, if you want to practice, and I know it might seem a bit long-winded, but watch the speech and look at what they call tonality. All right, it's a very, very. I went to a Jordan Belfort seminar probably about 6 years ago, and all he speaks about is tonality. So I did a bit of research on it, years ago, and it's very, very interesting. You can take it into every aspect of your life, but it's basically the confidence that you are speaking in, and obviously trading speeches is very, very important. You'll have obviously normal sort of speeches, a bit like this, don't really, move markets too much. It will only really be Trump, Jerome Powell, and obviously the head bankers who will, move kind of markets, but they've got to be what they are. Their tonality is basically analyzed, their averages, they will either be hawkish or dovish, which means they're either an optimistic member or a pessimistic member. They're positive or they're, negative normally. If they go against what their normal personality is and their tonality reads in that kind of a way, then yes, that's going to move markets. So because Jerome Powell, obviously he's held interest rates, which is, good for the dollar, the higher the interest rate, the more money is going to come in. However, it decreases, spending within the country. It's a very, very fine balance. It's not as easy as what everyone thinks it is. Because obviously you want everyone in your country spending, because obviously money, exchanges hands. However, you obviously need to curb that. Economies are like children. If I mean, I've got daughters. If you give them too much money, they're just gonna carry on spending it. So you got to curb it, and obviously that's where interest rates, come up, and obviously your interest rate might be, well, to get this money now, you got to tidy your bedroom, you got to look after this, you got to look after that, blah 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 blah. That's going to mean that they're not going to want to have as much money. So in a roundabout way. Might not have explained that very well. So yeah, let's obviously have a look today. I think we've got some jobs data coming out today. So 1:30, obviously jobs was on the list yesterday. So I do think, do you know what? Even though we're going to be trading against the dollar today, I'm going to be a bit cautious this afternoon because obviously jobs data, jobs was a highlight yesterday, and we've obviously got jobless claims tipped to increase. We've got non-farm productivity tipped to increase. Jobless claims, like I said, tipped to increase. So not looking great from the outlook here. Whether it's going to come in like this. We know that the US economy, the Fed, they're not very good with their numbers. I don't know if they do it on purpose to create this volatility, but obviously that is one thing that we are aware of here. I don't see our direction changing. I'm just going to put gold has triggered because it has triggered. So gold triggered. Sorry, things start to trigger on when I'm coming on. So right, so um let's now start on the dollar, find out where it is. So we obviously had a little bit of a pump yesterday. But then obviously once the effort, look at what time this turn happened, all right? The speech happened at 7. That's exactly when the turn happened. We gapped and obviously coming down to just currently testing around this 96 area. Every time that I don't think dollar can fall anymore, it falls another 100 points. So I'm not gonna, I'm not going to really try and hazard a guess, but I do think this will get equaled. I think we might get a continuation down here. I'll be surprised if it breaks 95 500. This is a low area, but obviously, all you guys have got to see is there is a clear downtrend here. Yeah, I hope everyone can obviously spot this. So you're not going to look to buy the dollar. All right, it's actually very very clear. Yes, we're always tempting a bit, but you saw yesterday we were selling it all day. Had this move happen? Did this affect us? Did this make us less profitable? No. We've still made money from selling the dollar, even though the DXY pumped. All right, why? Because we're going with the overall macro outlook. We're going with the overall trend. It's very, very easy. These are 2 points. If you go with those every single time, you don't have to get it exactly right, but it's all going to drift. Like it wouldn't have mattered where you'd have bought gold yesterday. You could have bought it anywhere. And if you're using the right, lot size, if you're, you know, yeah, then you would have ended that day in profit because you're going with trend and with macros. All right, so very very easy. Right, let's start at the top. So we got gold here, just triggered for us. Very very happy. It's nice to have a gold trade. We've been flying. Obviously, this is probably one of the best weeks that I've had in a very 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 long time. I'm hoping this is going to continue. But as you can see, because we've done this, we can be quite aggressive because we've got obviously profits to play with. So yeah, hoping for gold to carry on. I don't see it, stopping. I think it's tried to test back down here. Gold has just been flying. Like there's been no clear pullbacks here. So obviously that's why it's number one. I've stayed aggressive. You guys can obviously see why, we haven't gone any higher. I could have probably if I wanted a dream scenario, yeah, it would be here. What are the chances of it triggering? Not very much. All right. So that's why we've got to be realistic with our triggers. Is it going to trigger here? Yes. If it's going to carry on continuing to move, London is probably going to be that time. So I'd rather be a little bit more aggressive during, London. But obviously, yes, I'm happy with where we are here. Next one, I can't remember the order, so we'll just go from top to bottom. Aussie again, we obviously have to be aggressive. You can see why we've chosen this area. Price obviously pushed up here. A little bit of consolidation. So I think if we're going to get a pull back, this is going to be the first kind of value for money target. There's no value for money from buying from here, but there is value for money from buying from down here. All right. Next one would have been highlighting this area, but obviously, again, we have to identify current trend. All right. Our markets trending? Not really. So we've got to be realistic in our entries. Pound here again, it's very, very obvious why. We had obviously a nice build up here. That means there is a nice level of support here. So we got obviously, weight. This is to me, this is a value for money area. We haven't obviously come close yet, but obviously that is what I'm looking at here. Then we got euro, very, very close. Again, we have to be playing this aggressive kind of game here. I've tightened everything up ever so, slightly. We're coming close, but haven't quite tapped yet. I wanted to be in this area here to then continue to the upside. You can see on a 2 hour, there's a lot of support here. So, there's a big turnaround here. Imagine a car coming down downhill. This will be a massive handbrake turn to the upside. So there is a pretty hefty wall here. So obviously hoping for this just to come in and tap and then continue. We then got last but not least USDJPY. We didn't take this yesterday afternoon. I'm going to go over USD CAD in a bit about obviously what we went over. So. But obviously, yeah, same thing. Trend here. Where's it tapped? Last night it tapped into this area, so obviously hoping for one more tap, and then this will be. Remember, all I'm looking for in these, zones. I'm trying to simplify the way I'm explaining it, but obviously these are my value for money zones. I would be comfortable putting my money across the counter and exchanging it for this trade at this level here. If I change it or if I enter higher, lower, yes, obviously higher, I'm going to have even more value for money. But then you've got to analyze, what are the chances of that happening. So it's a fine balance between the two, but I am happy within my zone here. If price pops up, there's value for money for me to take this trade. Now let's go over USD CAD. I added it in yesterday. Didn't trigger actually until 6 p.m. I didn't take it. I just watched it. But obviously, as you can see here, strategy works even on a pair that we've never used it on. So I think if you'd have held this as a bit of a swing trade, yeah, 80 pips. So yeah, smashed it. The best one would have been gold. Shoulda, woulda, coulda, but obviously you don't know how Jerome Powell on a speech is going to come out. That's why I don't trade it. I stand back. So yeah, just be aware of that. Let's have a look at some of the questions here. That was crazy last night with gold. Yes, it was. Noel, on gold flying, would you bring your stop loss up to an acceptable profit level? Move your TP up. That way you're guaranteed profit. But if it flies, you're not missing out. Yes, I mean. I tried like I explained earlier with silver and BOMO. I tend to not it doesn't matter what markets are doing. I'm not going to get I'm not going to get suckered in. I'm going to stick to my plan. I'm going to stick to my routine, and that is obviously what I'm going to do. I'm not going to change anything. I've got my London session target. I've got my New York session to target, and as you can see, it's working pretty well. I'm pretty happy. So why would I change anything? But yeah, yes, it all depends on your risk, and obviously you've got to analyze this. If, for example, gold, trade kind of pushed up to about here. Yes, by all means, pull your, stop loss up to break even. I normally, I used to have a routine on currency pairs, 20 pips. I'd, move my, stop loss up, to break even. So, I don't see why that would be an issue. Um, but obviously, again, if you move it up too quickly, that then you might have obviously tapped here. Price might come up to like here. You might have moved stop to say here. We might get one more tap and then this happens. And then psychologically, you are then entering here, here, here. I have already analyzed my, risk on this trade. Like I'm trying to understand obviously how everyone trades gold. I think how they trade gold, you should be entering 20% of what you would enter on currencies because obviously gold, you have to have a lot higher, stop loss. Yeah, if you look at this, we've got like a five equivalent on gold is a 500 pip, stop loss. Whereas obviously GBP USD 50, so it's 10 times more. Trading, so if you're trading one lot on GBP USD, you got to be trading zero point 0.1 on gold, and then you're going to have the equivalent. And then what you will find, you won't be as stressed out. The only reason everyone gets stressed out on gold is because they over lot size, they over leverage, they over risk. And obviously that's why gold can move like 10 pips, 20 pips, and everyone's like, oh my God, my account's gonna blow. But really it's obviously, yeah, you're just over risking. But then gold doesn't give you that same buzz when you risk properly, because obviously everyone's getting this buzz because they're over risking. It's like you trading GBP USD on 20 lots. You're gonna get that. Oh my God, I'm 2 grand down. Oh my God, I'm 8 grand up. You've got to be realistic and not really worry about this. Sometimes I kind of welcome it because I make the most money on gold when I would be anchoring in another position here. And then obviously gold taps that and pops up. I don't even have to come halfway here. I can probably stop out here then. I mean, massive profit, So you want to, that's the kind of mindset you want. You don't want to be thinking, oh my God, I don't want it to come into stop loss. I'm like, I don't mind. I'm just going to add in. So, but you can only have that mindset if you're obviously trading the correct lots. So does anyone have any more for any more? We're obviously in gold. I really want euro to tap as well, but it's not looking likely. Obviously I'm not going against the dollar. I think anyone who is crazy. You're not looking at it properly. You're not analyzing. This is one thing that I want to say. I want everyone in this routine where they're doing this every day because it makes it easy. We could be trade. Say for example, a pair that we've never traded before. I don't know. Say for example, NZD, USD. All right, we know before we were even clicking on this chart, we are looking to buy it. Yeah. So then all we're doing, very, very easy. All we're doing is looking for the best kind of, value for kind of money to buy it, which would, potentially might be here, de depending on your, risk. Let's give like three kind of risk parameters. One risk would be here. All right. Next risk might be, you might be thinking, right, you know what? If I don't risk, is this worth it? And then the next one might be this bottom one here. Is this worth it here? Yeah. So that's then it's up to you where you take it from. But you're not trying to think to yourself, well, is it a buy? Is it a, sell? If I look on the dailies, we've got obviously highs here. You're ignoring this hell of, yes, it's moved. I'm sure if you went on the I keep forgetting what it's called, but it'd be classed as very, very, very overbought, but it would have been classed as being overbought like here, or here. And it's continued. So why would you go against what's happening, But all you've got to identify once you know the direction, which is very, very easy, All you've got to identify is where you are entering from. I mean, I would probably go somewhere in the middle here, and I'd probably go somewhere like this. RSI, that's it. It's just left my brain. Yeah. So, it's very, very easy and it's not hard. Kim, this is my third day here, and I like you make limit orders. This remove a lot of stress from chasing the market. Thank you for making it more simple to trade. No problem at all. This is the thing is, the easier you make it, as long as you're going with trend, with macros, we've seen that even if you're a bit kind of risky and say for example you got your trade here, all right, say for example you got your trade here, and it's something like this, right? Even if you're a bit naughty, right, and you extend, stop loss, price will always come the way it's supposed to go. All right, because of the overall outlook. Nothing crazy is coming out until later, and even the jobs data that's coming out, it's not crazy. It's not gonna suddenly make the dollar go. That's not gonna happen. So yeah, let's wait and see what happens. But no, I hope everyone has a great Thursday. We're obviously in gold. Let's wait and see what happens. Let's make sure today is another green day, and then obviously we can fly. So yeah, have a good one, guys, and yeah, may the green continue flowing. That's what we like to see. Have a good one.